Hey, what's up, guys? It's Dean Rogers. Welcome back to another interview. I got a buddy of mine on, Scott Krone. Welcome to the interview, man.
Thanks for having me. I appreciate it. I've been looking forward to this.
Yeah. So, little background on us. So, we met through Fortune Builders years back at their big conference, Ignite, right?
It was.
Yeah. Yeah, we met quickly, and we all kind of were in the same friend group, vibing together, hanging out together, getting dinner. You were the one that was had your shirt over your head, dancing at the nightclub. Was that you? That was you, right?
Hey, what happened in Vegas stays in Vegas. Come on, that's rule number one, right?
yeah. Yeah. So yeah, obviously you've got a lot of great stuff going on. So yeah, I'm glad we connected to do this. So let's dive in and let's talk about Scott, man. So let's start with the easy question. So how'd you get into real estate?
Well, thanks for leading with a good one.
Yeah.
So I got into it because my parents showed up my senior year of college and said, "Hey, what are you going to be doing next year?" And we had a family business, and I thought we'd be going into that. And they quickly advised me that I wouldn't be. And I thought like maybe I'd pissed off grandpa or something like that. And they said, "Nope, we're selling the family business. So what other thoughts do you have?" And I was like dumbfounded. Here was fourth generation family business, something
Wow.
I grew up knowing about. And they're saying like, "No, that's not going to be there." And, my dad quickly said, "Had you considered architecture? You really enjoyed it in high school when you took those architectural classes." And I said, "Well, I thought I'd sort of written that off by not pursuing that as an undergraduate. I went to college and wanted to do college athletics and all those sorts of things. So, I pushed aside architecture. And fortunately, they had these new programs where you could get a master's in architecture without having the undergraduate in architecture. So I signed up, and a month after graduating, I was enrolled in graduate school. And quickly, I had a professor that was working on $100 million project. And so he was a developer, he was an architect, and he was a builder. And so I was his TA, and he had this working on real projects. So he selected mine, and for the next 6 years, I worked with him, both in school and out of school. And so I was working on my master's thesis, which was a $100 million project. And so that's how I got into real estate.
That's pretty nuts. So we're going to unpack that. But before we do, does college, masters, any of that have to do with the hat? What's going on with the hat?
No, this is we have a facility. We have a self-storage facility, one-stop self-storage in Toledo. And I want to give a shout out to the Toledo Mud Hens. They're our neighbors. So we like to support the local minor leaguers and, the different sports, the different colleges near our self-storage facility. So go Mud
cool.
Hens.
That's awesome, dude. Okay, cool. So tell me more about that $100 million project. What gave you the balls to say, "Oh, I'm not going to just do any sort of normal project. Like I'm going to go for the big kahuna." So what was the project?
Well, I didn't have much of a choice. So he told everyone in class, like, "This is what we're working on." So the first day of, I'm the TA, and he's like, "Okay, this is what the program of the class is going to be like. This 50-acre site. It's a former Sara Lee factory, and we're going to be developing condominium plans." Mm-hmm. So the first day of homework was, drop this 50-acre site, come back with a site plan in 2 days for 50 acres of multifamily. So my original concept was 1,000 condominiums. And, so we refined that. So everybody in the class is working on it. So we're all coming up with these different concepts. Mm-hmm. And out of the 50 people in the class, he picked mine. Mm. And so we refined the 1,000 and we submitted it. And the village worked it down to 316 condominiums, 64 townhomes, and 16 single family homes. Mm. And we had to give 5 acres away to the fire department.
Oh, okay.
So it was literally where they used to make Sara Lee breads, and we converted that whole site into it. But so I didn't have a choice. Everybody in the class was assigned to do it. But fortunately, they picked mine.
That's cool. So what do you think of why did they choose yours? Was it like the best moneymaker or the best well designed? Like what was about it?
Well, it was, I think my site plan had created a different orientation to maximize views of the lake. And so
Mm.
that's what caught his attention. And so everybody else was doing these long horizontal rectangular buildings, which is very economically from a construction point of view. But so I took one of the buildings and then I created it in an L shape.
Hmm.
And so I had orientations between rectangular buildings and L-shaped buildings in order to maximize the views, with the road going all the way around these center entry lakes that we were creating. And so I think that's the reason why I picked it.
Sweet. So you work on that. Did you come out of that with, do you feel like that transitioned into everything else you did from there from a real estate standpoint?
Well, so everybody else in his office was strictly architectural background. So they were all on the drafting boards. It's 7 o'clock in the morning when I get to work, they would all be drafting. And then he'd have me working on the financial performance.
Hmm.
And so because I could read and write, that was the only reason why, I got stuck on the development side. So that whole background really taught me the business side of real estate while everybody else was drafting. I'm sitting here learning how to do financial modeling, absorption rates, payoff amounts, all these different things that go into this, huge loan that we were working on. I mean, the property was $13 million. And then we had construction, for all the other facilities. And so putting all that together, working with condominium associations, working with homeowners, purchase agreements, all those sorts of things. So that's where I really learned the development side of things.
That's pretty wild. I bet you that was helpful basically getting into it. So did you go directly from there into real estate, or did you kind of like try some different things out from a career standpoint before you got into real estate?
No, I was literally had a month off between I graduated May in undergraduate. In June, I was in graduate school. And so it was while in graduate school, I'm working for him. So
yeah,
it was, I've never done anything else except for real estate.
Yeah. Okay, cool. So what led you to get into Fortune Builders?
So I had a situation where a partner had issues with things with green little pieces of paper sticking to his fingers. Mm. And so I had to completely restructure the company. And as a result of that, I had to build it up from ground zero. And the way I figured I could do it, I had good systems that caught the problem, but I needed new systems in order to expand it. And at that point in time, my business was only like a subsection of Chicago, like a market north of the city of Chicago. And I knew that if I wanted to grow it beyond that, I had to have systems that helped me develop that and perpetuate it. And so I figured there's two different things I could do. I could either spend a lot of time developing the systems myself, or I could buy them. And so I chose to buy them. And then I also figured that if I had this network of people that were all already trained, then I could bring them into the company and it would take me less time to build up the company again. And so since that period of time, we've grown. So now we're from Wisconsin and Illinois all the way out to Maine. And so we have facilities across the East Coast or the eastern half of the United States.
Okay. So you basically got into Fortune Builders because you were kind of making a change, wanting to grow, wanting to learn, wanting to expand your community, all that kind of stuff.
Absolutely. Mm-hmm.
Yeah.
100%.
Yeah. All the same reasons why I got in it. So, and the crazy thing, one of the best things that I continue to tell people that I meet, one of the amazing things about joining a community mastermind, coaching program, whatever it is not only the information you learn, but it's the community. It's like meeting people like you and the dozens of other people that I've met and still stay in contact with and still do business with, or, trade ideas on. And it's pretty incredible. So there's definitely a lot of power to that. So I always recommend someone leaning in on, finding a community, because otherwise as an entrepreneur, you can just be kind of alone a lot of the time,
Absolutely. I mean, I regularly contribute on Bigger Pockets, and that's a huge debate. People say like, oh, you can learn whatever you want on the internet. You can, learn it from Bigger Pockets and this and that. I've had two major mentors in my life. I would not be where I am today if it wasn't for those two major mentors. And I've also spent a lot on education. And I mean, as you said, the whole reason I joined Fortune Builders was for the community and the systems. It wasn't because I didn't know how to do real estate. It was like I needed systems in order to expand and grow.
Mm-hmm. Mm-hmm.
And, I've always been a big proponent of having a mentor, and I'm going so far as to say to pay a mentor, because if you're not paying them, then what are you committed to? And if you're not paying them, then how good are they? And
Yeah.
so I think it's not just to say, well, I'm paying someone to do something. There's a commitment level. There's an obligation that comes on both sides.
Mm-hmm. No doubt about it. Okay. So got into fortune builders. Did you go straight into single family homes, multifamily? Like what was your path from there?
No, so I started in 91, and I didn't join fortune builders until 2015.
Oh,
So,
okay.
so
Yeah.
I had already,
You already been
I'd probably
cranking.
built like 100 homes, and, we've done multifamily and all that sort of stuff. So I had already owned multifamily at that point in time. So in fact, my first year at Fortune Builders, I won Creative Deal of the Year award, and it was for a self-storage conversion that we did. So it was a wholesale. We re-entitled it. We sold, we flipped part of it. We developed it, and we had rental income, and then we flipped the whole thing. So it was why I won the Creative Deal of the Year award.
That sounds like a sweet deal. Awesome. Okay. So went through your background, got into fortune builders. You'd mentioned earlier, we were talking about coaching real estate. What were you doing in coaching?
Well, I was teaching college architecture as well. So, once I graduated, and a few years later, I was asked to come back and be a professor of the same studio that I was a TA in. And so we were teaching second year students. But then I was approached about coaching real estate in lieu of, teaching architecture. And I thought that would be more rewarding because, there's an 80-20 rule. And, the first thing we'd ask every student the first day of class is, what do you want out of this? And everyone who said they wanted an A inevitably did not earn an A. And those that didn't say that, like, I want to learn this about this, they're the ones that actually really wanted to do well, and they earned an A. And that's what we told students. We don't give out A's, you earn them. We're going to tell you exactly how to get an A. And it's up to you. If you fulfill these things, you'll get an A. It's pretty straightforward.
Yeah.
And so I thought that coaching real estate would actually be more rewarding because people were paying to learn how to do these things. And so I made the transition from being a college professor. And it was only part-time. So I was doing that and helping people develop and get into self-storage, or not self-storage, but into real estate. And so one of the clients said, I want to get into distressed self-storage. And that's when I started researching it, and I couldn't find it. It was like, this is post-crash, 08, 09, and self-storage every facility was doing well. I'm like, what's the deal with this? And that's how I started really researching it and investigating the self-storage industry. And I told him, I said, if you ever really want to get into this, you're going to need to develop it. Developers are where you make the money in real estate. It's not, you can rehab something, you can flip it, but to make real money, you develop things. And so that's how we got into developing self-storage.
Okay. So how did you find self-storage? Like, were you just doing a lot of research and looking around, or did you have somebody that kind of gave you the elbow and said, hey, check it out? How'd you get into self-storage?
Well, this client had attended a boot camp about, self-storage. And so he had like what the criteria that we had to do, but then I helped him understand how to evaluate it. And evaluating the level of risk for what he was trying to get.
Based on your background, you had all that skill set already, right?
Yeah, because if you think about it, people will say to me like, I get multifamily, but I don't get self-storage. Well, it's apartments without toilets, right?
Yeah.
Let's take the most simplest. You have a house that's a single unit, and then multifamily is multiple homes. And then self-storage is just a simplistic version of these little units, right? And so there's not much difference between, single family, multifamily, and self-storage. You're all in the paradigm of renting or, acquiring space.
Yeah.
It's just what's included in the space. I've worked on $14 million homes, and I've worked on $100,000 townhomes, but
you've worked on $14 million homes?
A $14 million home. Yeah.
Geez Louise, what were you doing with that thing?
Well, that was interesting. I was brought in as a expert witness because of complaints that the owner had against the contractor they bought the property for $7 million, and then they put a $7 million addition on it.
Yeah. Wowzer.
And so the window package was originally quoted at $3 million. and the contractor custom built them for $1 million, and they were on the lake, and every window was leaking. So I was brought in to figure out why the windows were leaking.
Window package, $3 million. Oh, wow. Damn, those are some nice windows, man.
Well, and not if they're all leaking.
Right.
But I mean, this was a very interesting house. I mean, it had like 7-car garage, underground had an elevator, and, in the garage, he had a Ferrari, he had an Aston Martin, he had, Land Rover, Mercedes, he had a close to, $3-4 million worth of cars in his garage.
Yeah.
So, we were brought in to address a lot of the issues that were brought up during the litigation.
Yeah. Cool, man. So the interesting thing about multifamily self-storage is not only analyzing the deal and understanding that, which clearly you have experience doing and are really good at, but the other part of it is structuring the deal, putting the pieces of the puzzle together by bringing in banks or bringing in, a money partner, whatever it is. Right. So tell me what that's been like for you in terms of structuring these deals.
Well, I think that, a lot of people ask me about the creativity of being on the design side with the architecture, but I think there's as much creativity in terms of putting the deal together. Mm-hmm. How you structure it, how you evaluate it. I mean, I think there's a tremendous amount of creativity. And part of that is the capital stack. What levels? I mean, we've done everything from PACE financing to opportunity zones to historic tax credits. These are all instruments that we've been able to research, bring in, and to develop in order to enhance our capital stack. The idea is to help our investors rate of return on their investment. So right. we did the first opportunity zones in Ohio because of the fact that when we opened it, the guidelines weren't even done. They weren't even been published yet, but yet we had already opened and funded and closed on a property for an opportunity zone. So it's all the creativity of how you put together the capital stack.
Yeah, no, there's a lot of different moving parts, but what have you found has been the most helpful for you to navigate those? Is it just like a couple different relationships that you have that have capital to back them up, and those are big players in the equation, and you've got the good bank relationships, or would you say you're really good at like raising capital from a lot of different people and just kind of pulling it together and putting it in the deal? Like what has been kind of the best or the bread and butter for you?
Well, I think it's something that we've developed, but I think the bread and butter for us is like figuring out a solution. Okay. And in terms of understanding the problem and figuring out a solution, and then being able to communicate it in such a way that people understand it. That is our bread and butter. That is what we do really well. Because, when opportunity zones came out, I didn't even know what they were. No one knew what they were because it was brand new, right? I mean, It was like 3/4 of a paragraph or a page in the tax code. And yet here we had to figure out this whole structure and then have other people say they want in and then the first one we did was $250,000 where 3 people invested in the opportunity zone. By the time we opened up the second opportunity zone, it's $2 million. And so it's a way in which to structure or shelter from capital gains. Mm-hmm. And so 1, we had to understand it. 2, then we had to be able to communicate it. And 3, we had to be able to implement it. And so a lot of that is you have to find the right people that say yes, as opposed to just saying no. I don't mind someone telling me no, but at least I have to understand why. And because then if I understand why, then I know what I have to overcome in order to accomplish it.
Right. Yeah, I think everything that you're saying, you do it with such grace. You got a lot of experience, but that's one of the biggest things for people who are performing at a high level in this space or any business is just their ability to understand information, put the pieces of the puzzle together, or have the right relationships, or just problem solve and kind of work through things and figure out how to get things done. And clearly, just from your background and it just seems like your desire, like you're willing to figure it out, whatever it is, to understand it, learn it, and then take action on it. So, what would you say is your superpower? What do you think is allowing you to do this? Are you just a genius, or what because I've
Clearly,
met.
you haven't spoken to my wife recently.
I say that because I will meet some people. There's a wide spectrum of people that are performing at a high level, and so some of those people are really smart, and they actually can get the results to back up what they understand. There's also people that are really not smart, I would say. Like, they might not be articulate, they might not understand really basic, simple things, but they just locked in on a certain strategy or developed a certain skill set and find themselves, making their own way. And then other people just hustle their way through things. So, what do you think is kind of your superpower that's allowed you to find success?
Well, I would say my ability is to take an idea or concept, break it down, understand it, and then apply it to what we're doing. So for instance, you and I spent a lot of time in a mastermind regarding marketing. Okay. Now that was arguably one of the weakest areas of my understanding of business. And so the whole reason I jumped into that was because I wanted to understand it. And you guys are talking about, SEOs and pay per click and all this. And at first I'm like, SEO. And then, I'm like Googling it just to make sure I was understanding the concept right,
Yeah.
And I'm saying that honestly because I would not that I want to convey that I know everything about everything. That's not the case. But I quickly learned the lingo that you guys were doing, and then applying it, and then figuring out how you guys were all doing it for wholesaling. And I'm sitting there saying, how can I take these concepts and apply it to my self-storage marketing for tenants? Okay. So I wanted to take all those concepts, all those search engines, all those different things that we're doing, that you guys were doing to search for clients. And I'm like, how can I get clients for self-storage rentals? And so you can say like, well, what do the two have to do with each other? But ultimately it's the same sort of concepts. You're just breaking it down. And then I'm just figuring out how to apply it. And that's the thing that my mentor, who, he came from Lebanon when he was 16 with like less than $300 in his wallet. And, 50 years later, he owns Great Harvest Bread, Lazy Boy, and he's the president of High Point University. And he just did $2 billion of expansion on the High Point campus.
Wow.
And so, this guy takes these ideas and knows how to monetize them. And that was like one of the biggest things I learned from him is like, understand an idea and then apply it, these are simple concepts that he put into place. Like when he went to High Point, the school was almost bankrupt. And the first person the job he created was the director of WOW. Okay. And you're like, why would you create a director of WOW? Well, he said, well, if I'm going to expand this campus and get this campus going, I have to turn every unwow into a wow. And so this guy's job was to identify every unwow and then figure out how to make it a wow. Okay. And so that's how this guy's job got created. Okay. And so I'm listening to his process, his thinking, and saying, I have this design build firm in Chicago that we're working in the small North Shore niche. How does this apply? And I'm thinking, seeing these things on a bigger scale. Well, how did he get to a bigger scale? It's the same sort of concept. I learned what he applied and then, integrating it into my business. And the first thing I realized is I had to go from a business that was transactional based into a business that is revenue based. And so that I could grow and expand it.
Yeah. So would you say that's your main focus in terms of looking at new opportunities, is what can generate and create more cash flow as opposed to, kind of a big payday? Would you say all your eggs are in that basket?
Well, make no mistake about it. My eggs are in the basket of the big payday. I mean, we're in the process of developing a portfolio of in excess of $100 million, probably $150 million. So that way we can flip it into a mid-level REIT and, have a payday of that. But in order to get there, we have to have all the things to create better revenue so that there's more valuation in the portfolio. Yeah. So we get a bigger payday. So there's a lot of the micro that we're doing, but the main objective is always to sell business.
So what does that project look like? If you're working on a portfolio, what kind of projects are going into that? Are they all in one central location? or are they mixed, mixed classes? What's that look like?
Well, the class is self-storage, but if we talk about different asset classes within self-storage, there's predominantly three. And within multifamily or single family, you say class C, you think bad neighborhood, and you think class A, you think great neighborhood. But in self-storage, they classify it as two different or three different types of assets. So class C would be like first generation self-storage, more rural. It would be like a mom and pop, smaller. We would equate that to like a penny stock. A class A would be urban, larger, over like 500, and usually climate controlled or newer. So that's like a class A where you can actually drive into it. Mm-hmm. So a lot of our projects are taking underperforming commercial buildings, which are either not doing real well or empty, and converting them into self-storage and then leasing them, getting them all leased up so they have more NOI, which means it makes them more valuable. And so that is our primary objective. So we've developed in Milwaukee, multiple ones in Chicago. We've done Toledo, Dayton. We're starting in Louisville, Kentucky. We're building a new facility in Michigan, and we're working on expansions in Virginia and Maine. And then we're also helping develop facilities down in Florida.
You need to pick a few more states, I think. Oh man, that's cool. So, when it comes to looking, so let's break down identifying an opportunity. So are you looking at like a commercial shopping center and looking at some building that's underperforming, or some anchor tenant just moved out and that's it? Or is it more of like the warehouse type of building or office building that you're then converting and like completely changing the architecture of it? Or like what is your typical opportunity look like?
It's been each of those. So the self-storage market is 3 to 5 miles. Okay. It's that small of a radius. If it's beyond that, people aren't willing to drive that far. Mm-hmm. And so the typical knowledge is 3 to 5 miles, but in rural areas or in cities, it's like, I'm not willing to drive more than 20 minutes. Yeah. So like in New York or Chicago, 20 minutes drive is like 3 blocks. And, out in the rural areas, that could be, 60 miles. So depending on how fast you can get there. Right.
Yeah.
So, so what we're always looking for is that 3 to 5 mile. And then what we do is we focus in on that specific market to see how much other self-storage is already in that market. And so we can identify whether or not there is a good market within that 3 to 5 mile radius. And so, for instance, when we're looking at Milwaukee, there's a great building. I don't know if you know what a Menards is. It's like a Home Depot or a Lowe's. Yeah. And, it was over 100,000 square feet. It was on 17 acres. We could have subdivided out, done outlots, sold those off. The building was perfect for self-storage. It was fairly new, but they closed this Menards and built a new one. And I'm looking around and the broker's like, oh, this is a great opportunity. I'm like, it was a great price. It was a great building, but I'm looking around, there's all these single family homes. And then I'm like looking down the street and there's like 7 self-storage facilities. And I'm like, there's probably way too much here. And sure enough, the saturation was well above 7. And 7's like where your supply and demand index hits equilibrium. Mm-hmm. And so as a result of that, I was like, this is not a market we want to go into. And so we found this other building that was 100,000 square feet. It was on 8 stories. And we had 500,000 people within 5 miles. And the market saturation was 2. And I was like, this is an awesome building. And so that's where we did historical tax credits. So we actually got $2 million of historical tax credits for our investors on that project. We got it.
Yowzer.
Yeah, we got $1 million in state and we got $1 million in federal taxes.
Wow. So let's kind of unpack your research a little bit. So do you have like some magic tool that you have that kind of spits out this information, or are you just, going on to Google Maps and saying, Milwaukee sounds kind of nice. Let's go look around Milwaukee and let me Google search some self-storage places, or like, how are you even finding where your next opportunity is?
Well, we have, brokers, people, we have investors, we have all sorts of people just shooting us properties every single day.
So you're not really doing marketing or identifying and like heavily looking. It's more like people know about you. They're bringing opportunities.
Right.
Yeah,
Yeah. I don't
that's
send out,
ideal.
I don't send a single flyer out saying, hey, we're looking to buy self-storage. Um, so because a lot of the, we're not, I mean, we bought a few self-storage facilities, and again, people brought us those, and it was like, so we're not spending a ton of money on our marketing on that. And, so someone brings us a property, and we will put it, the first thing I will do is put the address into Google Maps, and then I'll put self-storage near space, the address. And, it will come up. And if it's like, if there's 30 facilities within 3 miles, I'm like, this is, yeah, it's pretty much out. If there's not, then, I'll turn Google Maps into satellite and see what the demographics are. Are there a lot of single family homes? Are there a lot of multifamily homes? How rural is it? All those sorts of things. I mean, you can really tell a lot from Google Maps. If it looks pretty good, then we put it into a software called Radius, and Radius will give us all of the demographics that we need. So it will tell us what the market saturation is, how many facilities are online, what are the pricing that they're getting. And so then we can begin really analyzing the market to see, is this an underserved market, or is it an overserved market? Is there opportunity there? And so we can get a lot of that information as part of our initial due diligence.
Cool. So what are the key things that you're looking at? I was talking to another buddy who's into self-storage, but I'm curious to hear what you say. What are like the key things? Is it single family that's close by, multifamily, schools, hospitals, fire departments? Like, what are the key things that kind of come together to say, yeah, this is a good area?
So we're working on a new one right now. It's right here in Michigan. Mm-hmm. Okay. And it's what first attracted us is we're buying 9 acres for $150,000.
Sounds nice.
Yeah. And so part of it was the reason why it was so cheap is it wasn't zoned for self-storage. So we had to first had to rezone to commercial, and then we had to do a special use for self-storage. And so inherently we added value to the property by rezoning it. But what attracted us to that was there's not a whole lot of competition. There's like 4 other facilities. None of them are climate controlled, and they're all owned by the same guy, and they're all 100% leased up. In fact, the last one that he built leased up in 9 months. And so we had all the data from it, but what we saw was it was just not self-storage, but there was a real demand for boat and RV. Mm-hmm. And so as we were looking at that market, we just said, this is an incredible market that's really not that much tapped into, and there's no climate controlled self-storage at all. So it was underserved from a self-storage perspective. Everything was 100% occupied. And the fact that there was no climate controlled self-storage in a market which really demands climate control because you're in Michigan. So during the winters. And so that's why we went into that marketplace. So we were developing 75,000 square feet, net rentable square feet of self-storage and RV storage in that marketplace.
Nice. So what are people putting in their storage units that they need to keep it from getting into the freezing temperature?
Well, it's not so much the freezing temperature, it's the expansion and the contraction. So as your climate control is really addressing 2 different things. It's one, it's keeping the temperature consistent, but it's also addressing humidity. Yeah. And so, or lack of humidity. And so when you go from, 90 degrees and 100% humidity in the summer to, minus 20 and 0 humidity, you're getting a lot of expansion and contraction. So if you have furniture or anything along those lines, woods that are sensitive, they're going to not do well in non-climate control self-storage.
Your painting is going to come out looking all funky or whatever, right? Like,
yeah, or your bed frame's going to be split.
Yeah. Yeah. Okay. That makes sense.
But the other thing is adult toys. They don't want their toys to freeze.
Yeah.
So if you got gas lines, you got things like that. So they're, put their, their ATV in a unit or that sort of thing, and then they know it's protected, or their snowmobile.
Yeah, that makes sense. So when it comes to your opportunities, are they all development, like completely ground up development? Are you doing any redevelopment deals? Like, what does the typical deal look like?
Our typical deal has been redevelopment. So the first 7 facilities that we did were buying existing buildings and converting them into self-storage. So the reason why we did that is we're buying these buildings well below replacement cost. I mean, we were buying them anywhere from $10 a square foot to $20 a square foot. I can't build a building, especially one that's 10 stories tall or 8 stories tall with elevators for that price.
Yeah.
And so then we put like $3 or $4 million into these things, and our cost basis would be 40% cheaper than new construction. So we have a competitive advantage there. So that was why we were doing that. We bought an existing facility in Jackson, Michigan, which is, like right here. Mm-hmm. And it was 30% below market in terms of the rental rates. So the only thing we're going there is we're putting in a new punch key code operated gate, more mm-hmm. cameras, and we're raising the rents 30%.
Yeah.
That's all we're doing.
Right. Sometimes it can be all just that simple, I'm right. Assuming that came through a broker or something too.
So what happened on that one is we had a client that was working this owner for like a year, and he agreed upon a price, and then he didn't sign the contract, and he said, I'm going to put it on the market. And he's like, so our friend increased his price, and the guy said, no, I'm going to put it on the market. And so, this broker convinced him to do it. And so we went through the broker and actually, put it under contract without the guy knowing that our partner was the same person. And so the owner ended up netting less money because he had to, pay the broker commissions and stuff like that. And so, he sold it for more, but he netted less. So that's how we got that facility.
Some people are thick-headed sometimes. So be it. So what does your operations look like now? Do you have like full-blown, full-time team? Is it just you and kind of with some loose partners? Like what do things look like for you?
So like I said, I literally grew the company. I was down to myself. And so now we have, I have 3 companies. So we have Code Design Build, which does our development side. We have Code Management Group, which manages our portfolio. And then in 2020, we opened up One Stop Self-Storage. And that was the whole reason I was in that marketing, mastermind with you in terms of listening, because that's when we were about to launch One Stop Self-Storage. And I wanted to make sure that our webpage had all these different aspects to make sure that, we could attract people on Google, dollars and Facebook dollars and, Instagram and all these different ways that we're marketing to get our SEOs, our clicks up, and, where our search engines and where we position. And so all those things are very important on our retail side of things, because self-storage is very much a retail business as it is a real estate play. And so those are the main companies that we have. We have Code Design Build, Code Management Group, and then One Stop Self-Storage. So we launched that in 2020, and we've converted all of our facilities over to One Stop.
Cool. And you have people full-time on staff, or?
Some facilities we have full-time people there, and other facilities like the one in Jackson, Michigan, there's no one on site. We operate that one completely remote.
Nice. Okay. And then like your day-to-day operations, you have people that are employees of the company and, working on operations, working on relationships, raising money, like all that different kind of stuff.
Yeah, we have. So our main chairs are, I'm director of development. Then we have director of sales and acquisition, which all those things that fall into those categories that you were just describing. And then we have our director of construction. And so between those 3 main chairs, that's where all the other people fall underneath.
Nice. So you're working with the city, probably yourself, working on plans and all that different kind of stuff, getting entitlements done and all that.
Entitlements. I'm also, working on the design, the entitlements, putting the financial package together, working with the lenders, the more global things. And then sales and acquisition is identifying it, working with our investor pool. And then director of construction handles our operations in terms of building it and then maintaining the buildings.
So you're still getting out the good old paper and drawing plans and doing stuff like that?
It is becoming a lost art, and especially when we like every summer we have a bunch of interns. And so,
That's cool.
So last summer we had like 5 or 6 interns, and this year we've had 3. But a lot of times, in order for someone to understand something, these guys are coming to us that have never done anything in construction or real estate or anything like that. And so what's a footing? What's a wall? So I'm drawing these things out, and you have to be able to sketch to communicate ideas. So I'm always a big proponent of sketching up and drawing. but I've progressed a little bit since my dinosaur ages of paper and trace and all that. But I'll sketch up with now computers and
Yeah.
create 3D modeling and stuff like that to make it easier for people.
Cool. Awesome. Yeah. I mean, that's obviously a huge skill set and probably saves you a lot of money rather than outsourcing it to, a company that can do all of those different things from the engineering standpoint and the plans and design, all that kind of stuff. Right.
Well, we still have to do that because of the local licensures. Each state has their own licenses. And
Okay.
so, but I will take my ideas and give them the file, my sketch
Makes it
files.
easier. Yeah.
It makes it easier, right?
Yeah. Awesome. Cool. Um, so tell me, man, what do things look like for you on a daily basis? Like, are you just in the trenches, grinding through these projects? Are you flying out to check on site and see how things are going? Like, what does the day to day look like for you?
Most of the days I'm in the office, in our corporate office, overseeing, just in terms of the more major things that are going on. This this month's been a little crazy because COVID has just hit our office, and then obviously there's summer vacations and all that sort of stuff. So it seems like I'm wearing a lot of hats right now.
Yeah.
But my bread and butter is, I'll get to the office around 8:30. I begin it by paddle boarding on Lake Michigan. That's my time of solitude and silence, which I really need to refresh, refocus, and just really calm my mind. And it's whatever project that we're working on, where they are. So the different milestones, like for instance, we're closing a loan in Louisville. At the same time, I'm working on refinancing one that we're at the same time we're developing one through site plan development. And, I'm each of those within the day, I'm hitting each of those different activities and making sure that they're still progressing where they need to be.
Mm-hmm. Cool. And then what would you say you're most excited about? Like, is there like a certain goal that you're going after? I know you got the portfolio thing that you said you're working on, wanting to flip to a REIT, which I'm sure is exciting to work towards. But is there a particular new thing you're wanting to go after, or a certain target you're going after? Like what keeps you excited right now?
Well, we've developed enough of a portfolio that we're beginning to get the interest of the REITs. They're beginning to evaluate and assess what we're doing. And, I tell them that, I'm in real estate, everything's for sale except for my kids. My wife makes me put that caveat, right? So, if the price is right, we'll move it. But if not, then we'll hold it. We're not under, pressure to necessarily have to move the entire portfolio. And so that is the type of thing where it's exciting to see that, we've been developing this 5-year plan that we're beginning to see people get interest in what we're doing. So that's exciting for me. The other thing is that I've been really focusing on how to get the business to the next level. And that's been involving, looking to get, when I say more institutional investors, more family office. So, bigger, deeper pockets. So the challenge within self-storage is, the big level investors doesn't want to invest $100,000 at a time or $1 million. They want to invest $10 million. Well, bless you. Most of our facilities are, end value might be $10 million. It might be more than likely it's going to be under $10 million. So, it's like this ugly little stepchild that, it's this growing interest, pocket where Warren Buffett and Bill Gates and Blackstone, major REITs are coming into the space and buying up. And, we're seeing portfolios, trade at $1 billion. And yet when you get down to it, each asset, is 3 million, 4 million, 6 million, 7, 10 million.
Gotcha.
But, so it's a lot of these little smaller portfolios that equate to it. So, how do we position ourselves? What do we have to do to grow? How do we expand? So that is what we're working on. And I've been working with an advisor who's connected to a lot of the family offices to help position us into the right space. But then the other thing is, in Chicago, there's this organization called Project Hood, and it's an incredible ministry. Corey Brooks started, and it's called the O Block, and it was designated as the worst block in not Chicago, in America.
Wow.
And so he started this church on O Block, about 20 blocks south of where I did my graduate work.
Hmm.
And, they told him that he was going to fail. And he was right across the street from this motel, which was notoriously a gang center where they were prostitution, drug selling, all this sort of stuff. And he went to the owner of the motel and he told him, "Hey, look, you got to stop these things." And he goes, "What are you telling me to do? You're the third church on the block. You think you're going to make a difference?" And so Corey climbed up on his roof and he vowed not to get off the roof until he raised enough money to buy the hotel. And he raised $400,000 and bought the hotel and demolished it.
Wow.
And so he's been investing in this community. And when I say investing, he has taken like the former gang leader, and now the guy has gotten involved in the ministry and was his personal driver, and now leads all gang prevention and violence prevention for this ministry. That's the radical transformation that, and that's what gets me excited is helping people see radical transformation. And so they're now trying to build a $30 million community center. And so I was up, and so he went up, he's back up on the roof. So he's on these shipping containers. He went all through winter trying to raise money. So I'm up there, and I was invited to go with the owner of the Cubs. And then they had two gubernatorial candidates there. So we're up on this roof where he's got like tents on these shipping containers, and he's got these tents up there with a solo fireplace that, trying to keep everybody warm. And we're all sitting around listening to his vision as he's trying to raise $30 million. And so after everybody else has had their turn and, the bigger boys have, come and gone. And, I went up to him, I said, there's multiple ways of raising $30 million. And he goes, "What do you mean?" I said, "Well, have you looked at the cost?" I said, "You can raise $30 million, or you can make sure it doesn't cost you $30 million. So if it only really needs to cost you $27 million, then you just raised $3 million. And he goes, "I like the way you're thinking." I said, "Has anybody given you bids?" And he goes, "We have 3 bids, but," I said, "Well, I'd like to take a look at the drawings." And so not only did he give me the drawings, but he gave me the other bids. And so I'm sitting there comparing it, and I'm like, the bids ranged, the budget was $27 million, and he got bids from $36 million up to $44 million off the same set of drawings. And we put our bid together at $27 million. And so he's in the process of raising it, but it'd be nothing more fun than building that community center for that organization down the south side of Chicago.
That'd be wild, man.
So we'll see.
Talk about getting involved in your community.
Yeah. So I think at the last I've heard, they raised about $20 million.
Wow. Getting close.
So the next thing I said was, look at changing the revenue structure, or maybe perhaps we build one half and then the other half. But I've, looked at how we could value engineer the project and make it, more sustainable in terms of revenue sources and things along those lines.
That's awesome, man. Super cool. Thanks for sharing that.
My pleasure.
A little extra goodie. Well, man, I could keep talking to you. You're a wealth of information and knowledge, and we definitely got to sync up more. I'm looking to get into self-storage myself, my partner and I, and have some other buddies that are already actively doing it and building portfolios. So we're definitely going to stay in touch on that. But thanks for all your time. And how can people reach out to you and get in contact with you?
Well, the first thing I'd like to do is say thanks for having me, and to thank your listeners. We have a couple of gifts for them. One is a feasibility study, which is a study that we hire. We hire independent consultants to assess our property that we're evaluating, and they put together a report for us. And so it's like a 7,500-page report of why we did our project in Dayton, Ohio. And so I will give that to anyone who calls or emails us or references the show. We will include that gift to them. But then we also created a self-storage deal analyzer in Excel, so that you can plug in assumptions and see if the deal works or not. And so we'll give the 2 of those things to your listeners if they reference the show when they email us. Okay. But our email is info@coda, CODA-MG.com. That's info@CODAMG.com.
Perfect. Yeah, we'll throw it up on the screen and make sure people can see that nice and easy, and we'll put it at the beginning and end. So awesome, man. Super fun chatting with you. Good to catch up with you. And Any last words you want to leave with anybody?
No, I appreciate our time. Thanks so much for having me. I really enjoyed it. It was always good catching up with you too.
Of course, man. All righty. We'll catch you soon.
Sounds good.
Peace.